SOFI, being in the neobanking industry, saw quite the rise in stock price in 2021. However, with the majority of the market right now, the stock has been absolutely annihilated. So I think the biggest question on people's minds right now is, will this stock ever recover, and is it a good buy for 2023? Well, I think you need to look at it like this. Financial services are one of the world's largest industries, worth trillions of dollars currently, and it's also one of the world's oldest, with lots of traditional ideas about how to operate and how to make money. However, financial technology companies like SOFI are trying to do things a bit differently, and as a result, are lighting a fire under traditional banks, like Bank of America for instance. But trying to change how banking is done hasn't been without its difficulties for SOFI, especially since they first went public in June 2021. Currently, their share price is down about 82% from their high point in early 2021, and now is essentially trading at all-time lows at the time of recording this video. However, I think some important questions to ask investors are, what has the market so down on the stock in 2022? And more importantly, can it regain the market's confidence moving forward? Well, as always, I'm going to be honest with you guys. So listen to this. In my opinion, SOFI investors are showing a lot of uncertainty right now. Let me explain. SOFI is a digital bank, which means it doesn't have any physical branches. Most members access SOFI using smartphones to access their entire super app, which provides the services that SOFI offers. These services include checking and savings accounts, peer-to-peer payments, investing, and various loans like mortgages, student loans, and some other things. And keep in mind that SOFI was awarded a coveted banking charter early this year, but this followed with some bad luck, especially recently. You see, its student loan business has effectively been frozen because the US government told loan recipients at the start of the pandemic that repayment requirements were frozen, and the government has yet to unfreeze the payment requirements. Furthermore, this freeze was supposed to end at the start of 2023, but President Joe Biden recently extended the freeze until the end of June 2023 after a federal court blocked his attempt to forgive up to $20,000 in debt among qualified borrowers. So currently, Biden is waiting for the case to be settled before ending the freeze. And I think it's also important to note that the loans don't accumulate interest during the freeze, so borrowers are not incentivized to refinance them until payments resume. So SOFI can't really do much to monetize student loans right now until the freeze is actually lifted. And as I'm sure a lot of people are aware, the cryptocurrency industry is also going through some turmoil right now due to the collapse of FTX, which used to be one of the major exchanges. And following the FTX collapse, some United States senators called for greater scrutiny of banks that have crypto trading segments. No surprise there. But get this, when SOFI actually received their bank charter, the Federal Reserve pointed out that some of the activities conducted by its crypto brokerage, SOFI Digital Assets, were impermissible for banks. So SOFI was given 2 years to separate itself from their own division, or else get in compliance with the law. During this period though, SOFI was not supposed to expand its crypto offerings. The senators raised concerns because instead of pulling back, it seemed that SOFI actually did the exact opposite. They expanded their crypto offerings by allowing customers to invest part of their direct deposits into crypto without any fees. However, be that as it may, crypto is only a small part of SOFI's overall business. In fact, the fair value of all digital assets held for customers is just $132 million. Still though, the idea of increased regulatory scrutiny isn't ideal. Okay, so by this point you might be asking, alright, so you've listed a bunch of cons. Are there actually any benefits of buying the stock right now? And what's in it for me if I decide to invest? Well, here's where you'll really want to pay attention if you're thinking of throwing money at this stock. In my opinion, SOFI keeps delivering where it counts. However, I don't think investors should disregard the uphill battle that they currently face, but they should also note the company's stellar performance that it still manages to generate. SOFI has still been consistently adding members over the past few years, memberships increased 61% year over year in the third quarter of 2022 and now surpass 4.74 million. And much of SoFi's growth comes at the expense of existing banks, albeit growth is slowed as the base numbers get larger. But to me, it's clear that SoFi is maintaining some strong momentum, and I think this is something that investors should follow moving forward. And on top of this, another important metric to look at is the company's increasing profitability, which is another big positive for investors. SoFi generated a positive earnings before interest, taxes, and depreciation of $30 million in 2021 and is guiding between $115 and $120 million in 2022. And getting the bank charter was a big help there, as it currently allows SoFi to perform core banking functions like holding its deposits and loans instead of relying on a partner bank and giving them a cut as well. And their profit will only keep growing as SoFi continues to pull in more members. But overall, if you want my opinion, I think SoFi has an incredibly bright future right now. Plus, come on guys, this stock is incredibly cheap right now, which is another huge plus if you're a long-term investor in this company and are looking to either start or add to your position. Plus, student loan payments should eventually resume, which will help SoFi in the long run. Also, cross-selling on SoFi's app could help lift revenue over time, since the average member currently uses fewer than 2 products. So there's plenty of room to expand on that, given all that their super app has to offer. However, probably the most important thing for investors to keep note of is this. SoFi's potential crypto investigation bears watching and is likely a big contributor to the stock's price fall over this year. If SoFi can't get a handle on the situation and resolve it, the potential regulatory damage it could cause to SoFi's banking charter would be another factor to watch with this stock. Still though, the stock's brutal decline over crypto sort of flies in the face of positive news and real potential for this stock. While I know this is pretty discouraging for a lot of investors, it seems that Wall Street is also missing an opportunity here. Overall though, given the immense growth potential that SoFi has over the long term, SoFi seems like an incredibly favorable risk to reward investment where the upside greatly favors long-term investors. So for this investment to pay off, SoFi needs to keep executing and staying out of the regulatory crosshairs. And with that in mind, I think SoFi has what it takes to become an incredibly influential and powerhouse of a stock in 2023 and for the years to come. And that'll wrap up the video for today. Thanks as always, and I'll catch you next time.